Yeah, should I just say control system?
No, yeah, you don't have to say control systems, just write down trial balance, because the trial balance is a form of control. Okay, so we use the trial balance to control and manage the accounts. Okay, so when we look at it, we'll mention that in the theory. Okay, for now, I think you can just label it as the trial balance, because that's what the whole chapter is actually looking at. Okay, great. So chapter 10, heading the trial balance. Let's define it. What is a trial balance? How would you describe it? For someone who has never studied accounting, what would you say?
It's like a place to record the different accounts.
Yes, okay, so it's a list of different accounts. So a list of different, you can even be more specific, we can say a list of different general ledger accounts. Okay, because remember the process is very specific. Just to revise that, okay? We start with the transaction. Transactions are recorded in source documents. Source documents get recorded in the journal. Once you've done the journals, you post that to the general ledger. Okay, how do we get the trial balance? We take the general ledger and we take every single item like that. Okay, cash, sales, purchases, Caitlin's account, Sala's account, rent, Rohit's account, wages, all of them. Okay, so this is what we take from the general ledger. We take the balances and we create that. Okay, so just to add an extra bullet, another bullet. The balances are recorded in the trial balance. Okay, we don't show everything, we just show the balance. Right, and you can add another note. How do you know what balance an account will have? How do I know that rent income or rent expense? Exactly, good. So just make another note about that. Okay, so balances are recorded and accounting elements are needed.
Elements
will show the debit or credit, exactly. Okay, good. Alright, so there's revision again. Okay, at the bottom of page 73, they talk about debit balances, credit balances. What will have debit balances?
Expenses, nominal accounts.
No, nominal accounts are income and expenses.
Okay, it will just be expenses.
Okay, so let's write that down, just revision. So debit balances for, which ones? Debit balances for?
Expenses.
Correct. There's two more. What else would have a debit balance? Yes. And
debtors. No.
Debtors is an asset.
Okay.
What's the other one? There's 6 elements.
Drawings.
Yes, there we go. Okay. And then let's do the same thing for the credits. So now, also, nice heading like what you're doing there. CR is the credit. That would be for what? The other 3. So what are the other 3? Yes, well, start with the income because you wrote expenses initially. Okay, and then? Good. And that's it. So basics are very important. That will never ever change. Okay, even like your great grandkids in the future will still use the exact same rules that you're using today. Okay, it's set in stone. That will never change. It's like adding and subtracting. Okay, it will always be adding and subtracting. Okay, so those are the elements, and that is what will be used. Okay, all right. So what they did here, just a test activity. Right, you don't have to write this down, but just answer it for yourself. Okay, so you've got different accounts there in that table. Okay, I want to know what those accounts are and what balances they'll have. Okay, so I'm going to add to the question. Okay, in terms of the balances, in terms of the trial balance. So wages, what is it?
Wages and expense.
So what balance?
What do you mean by balance?
Debit or credit?
Oh, so debit or credit.
Debit balance. Okay, good. Next one. Now just go down the list.
Premises.
What is
asset,
it? Good.
Debit.
Good.
Credit supplier is a liability.
Yes, we call them a creditor, basically. Yeah. Good.
So it would be credited.
Yes, it would.
Advertising is an expense, so it would be debited.
Good.
Sales is an income, so it would be credited.
Good.
Bank overdraft is a bank overdraft is
No.
liability.
Yes. Why is bank overdraft a liability?
You have to pay it back.
Exactly. A bank overdraft is when you withdraw more from the bank account, okay, than what you have. Exactly. All right, perfect. So you've covered that activity. Right, let's carry on. Let's write some more notes. Okay, they give you a little example here at the bottom. We're going to do it later on. Let's just finish writing down notes here in terms of the trial balance. So what is the purpose of a trial balance? What is the uses of a trial balance? Well, what would you say? So you know it's a list of different general ledger accounts. So why do we need this list?
To see which accounts are debited or credited.
Besides that.
To see the balance.
And why would you want to look at the balances?
So you can say profit and loss.
No, we wouldn't work out profit and loss here. To check if the debits are equal to the credits. Okay, so that's the use. So heading, the use of the trial balance, and then you can write down some bullets. Bullet number 1. Checking debits equal credit. That's the first reason why we would want to do this. Okay, so we would draw up a trial balance and we would immediately check. We'd add up our debits, we'd add up our credits, and we'd get an answer. Okay, the answer we get is going to represent what? The total debits and the total credits. Okay, if they're the same, what does that mean? You've done things correctly. If they're not the same, good. So the second point is identifying errors that have been processed. Right. So you might have made a mistake, perhaps. In today's world, it doesn't really happen because everything's done computerized. So the computer actually checks for you that you've put in both sides. Okay, even if you put in one side, the computer automatically does the other side for you. So it's much better now than it was before. But once upon a time when this was done on paper, then obviously we would have to check. Right, so nowadays the trial balance is not that important because the system generates everything for you. Okay. Right, there is one other reason. We would be looking at this. Okay, well, the errors again. So I think that's fine. We mentioned errors, hey? Identifying errors, that's fine. Maybe just to specify what the errors are. Okay, so underneath this, identifying errors, you can write down the different types. Okay, so you have different types of errors, and we need to look at what they are. There are 6 different types of errors.
Error of?
Yeah, the first one is error of commission. You might even remember some of this, eh? Yeah, because it was covered before as well. Okay, so error number 1, error of commission. What is an error of commission? Okay, so yeah, commission refers to someone earns a commission, right? Who earns a commission? An account holder. Okay, so an account manager would own a account. Okay, so for example, you own the account for this customer, this client. Okay, so errors of commission, here's the definition. Errors of commission arise when the correct amount is entered on the correct side of the wrong account. Okay, example, I pay for rent. Okay, where should I record that? Rent expense. But I don't, I record it under fuel. Okay. Is fuel still an expense?
Yeah.
Yes, but it's just the wrong expense. Okay, so let's use that as an example. Alright, so we're going to explain these just in a short sentence. Yeah, so you can say this error records the correct amount on the correct side of the wrong account. Records correct amount on the correct side of the wrong account. Okay, just put a little example there so you can always read it and just remember what it is. So e.g., we pay for rent. We pay for rent of 600 and record this as 600 fuel. or 600 petrol, or yeah, fuel. Use fuel.
Okay.
Okay, and that's it. Alright, so you're capturing 600 as fuel when it should have been rent. Okay, did you make a mistake? Yes. Did you break a rule? No. Commission just means you used the wrong account. Okay. Right, second one. Reversal of entries. This is a bit different to the one the other textbook. Okay, they've given you more here. Reversal of entries wasn't one that we covered before, so you probably wouldn't know what this is. Okay. Alright, so I'll read the definition. It says, this occurs when the correct figures are used, but both entries are recorded on the wrong side. Okay, so we're looking at recording debits and credits, okay, but we record them on the wrong sides. Yeah, so let's write that down. Recording correct figures or correct amounts. Let's use the same word as we did before. Recording correct amounts on the wrong sides of the accounts. That's what you're looking at there. Right, number 3, errors of omission.
Oh, no, forgive it.
Oh, you want an example?
No,
we can.
It's okay.
We can if you want to. Okay, I'll read the one that's here even. Okay, for example, $70 of goods were purchased from P. Smith, and P. Smith's account for the purchases was debited. Should you debit P. Smith's account? If you purchased it from P. Smith?
No.
No, you see there's a mistake. Okay, so you can write that down. Example, purchasing goods from P. Smith is recorded as a debit on their account and a credit for the contra account.
As a debit on
As a debit on that account, on P. Smith, and a credit on the contra. Okay, we don't have to look at the detail because it's not so important. It's just the concept is important. Okay, so you can just add there, if I'm purchasing goods from a customer, not a customer, a supplier. So if I'm purchasing goods from P. Smith, what is P. Smith?
He's a creditor.
Exactly. So should I be debiting the account? No. So you can put that note. Okay, just the last line, just at the bottom. Just say, purchasing from P. Smith, or say P. Smith is a creditor. Purchasing, brackets, P. Smith equals creditor. Brackets, credit them, not debit them. Credit, not debit. Okay, that's the key. So that's the mistake. Right, the mistake was I purchased goods from a creditor, and I did the complete opposite. Okay, I captured a sale basically rather than a purchase. Okay, it's incorrect. Right, number 3, third error. Errors of omission. That's an easy one. Omit means to leave out.
Yeah.
Okay, omission, to leave out something. Okay, so error of omission.
Yeah.
These errors occur when a transaction is completely missed from the ledgers. So error of omission, leaving out a transaction or leaving out half a transaction. Okay, so you can either leave out the transaction completely or you can leave out half the transaction. So I capture the debit, I don't capture the credits. Okay, or I don't capture it at all. Okay, those are the two options. Do you want to write an example for that, or is that okay? Okay. Number 4, errors of principle. Here's the one where you break the rule. Okay, highlight the word principle so it helps you to remember this. Okay, to have good principles would be like morals. Okay, principles would be like rules, things that we have to follow. Okay, so a principle is something that needs to be followed. Okay, so for example, can I capture sales as an expense? Why? Exactly, you would have broken a rule. Alright, so the definition here would be errors where transactions are incorrectly classified. Transactions are incorrectly classified. Right, here we can put an example because this one would be more relevant in terms of like errors or mistakes. Okay, so this can happen, and this the computer won't pick up on. Okay, because if you capture sales as income, or if you capture a sale as an expense, or if you capture an asset as an expense, the computer won't know. But obviously, you would have made a mistake. Okay, so this is where technology won't help you here, unless the technology can actually differentiate between different elements, okay, which technology can't do right now. Okay, maybe in the future it can, but not presently. Okay, so example here, we purchase furniture for the office and capture this as an expense. That's the mistake. Right, is furniture an expense? No. What is furniture? Good. Okay, so just add one extra line there. Furniture is an asset, not an expense. This is an error. Okay, then you've got two more. Okay, number 5 actually. 1, 2, 3. Principle.
Oh, sorry.
4. Okay. Yeah, 5 is errors of original entry. That's the heading. Errors of original entry. Errors of original entry. Just to read what they've given you here, they haven't described it in like a definition. They just say, if a credit sale for 176 was entered in the sales journal as 167. Okay, they're using errors of original entry. I think in your other textbook they talked about errors of transposition, I think. I don't know if you remember that. Yeah. Okay, so this textbook compared to last year's textbook is slightly different, just with this error. Okay, here they talk about original entry. Okay, so the error would be capturing amounts incorrectly. That's the error. Capturing amounts incorrectly. Example. A sale of 176. 176 is captured as 167. 167. That's the error of original entry. Okay, I think in the last textbook last year they spoke about transposition. Okay, transposition I think was the right heading that they used there, but it doesn't matter. It's just a different way of describing it. Okay, then the last one, compensating errors, number 6. Okay, compensating errors are very, very, very difficult to come by because it basically means you make 2 mistakes and both mistakes cancel each other out. Okay, which is odd, but it's possible. It's not out of the ordinary. It's just not very common. Okay, so number 6, compensating errors cancel each other out. Here you can write 2 wrongs make a right. Okay, so your one mistake cancels your other mistake, so everything's actually correct. Okay, but correct inverted commas in terms of debits equaling credits. Not correct because you have captured things incorrectly. Okay.
They cancel each other out.
Yeah, 2 errors, so two wrongs make a right. 2 errors kind of reverse each other out, I guess. That's the right way of viewing it. Okay. Alright, so that was the theory. That's it. Now we need to go back to the chapter, the example. Okay. Actually, let me give you this example then, rather than doing it from the textbook. We can use that actually. There's enough space there for the question. Okay, so just put a note there, example question. Okay, I'd like you to try create the trial balance, having been given these balances. Okay, so you can even say giving or having a list of balances, draw up a trial balance. That would be the instruction. Okay, that's what they want you to do here. Okay, so they give you lots of balances and they want you to draw up a statement. Not a statement, a trial balance.
Okay.
Right, balance number 1. You can identify what they are as we go. Okay, just as practice.
Okay, but must I?
Yeah, write down the question, but so you can write down the word and you just tell me what it is.
So I don't need to draw up the actual trial balance?
That you can do just now.
Okay.
Okay, so let's just write down all the balances. Buildings, 120,000. 120,000.
Okay.
What is it?
That's an asset.
Okay. Yeah. Fittings and fixtures.
Of?
45,000. What is
The
it?
things and fixtures that says in suites. Asset.
Yes. Okay. Fittings and fixtures would be similar to equipment or machinery or something like that. Okay. A van.
What?
14,500. Definitely. Okay. Vehicles is an asset. Right. Motor expenses. That's an easy one. 4,160. 4160. Okay. Yeah, it's straightforward. Rent. Notice they don't say what this is. That's a problem. Okay, so even look at the textbook. They just say rent.
Yeah.
Okay, so I actually have to look at the answer to then tell you what this is. Okay, this is rent expense. Okay, so you would write down rent expense or rent paid. Just giving rent wouldn't make any sense. Okay.
No?
7,000. Next one is taxes. What would a tax be? Definitely 2,400. Insurance. What is that? Good. 2,100. Cash. 120. Asset good. 120. Bank. 3670. What is bank? Yes. Okay. If bank was a liability, what would it be called? Bank overdraft. Exactly. Okay. So this one is fine. Okay. Writing down bank is bank. Right. Trade receivables. 850. What is it?
Trade receivables is a data asset.
Very good. Okay. There are still 1, 2, 3, 4 more. Maybe fit them in there. At least then you've got the question on one page. Okay. Trade payables, 1,200.
It's a liability.
Definitely. Sales, 260,000. What is it?
Okay.
Good. Purchases, what is that? Good. 140,000. Last one, capital, 78,600. Capital is capital. That's an easy one. 78,600. Perfect. Okay, so now you've got the question. On a separate page, can you draw up a trial balance? So, do you remember what a trial balance looks like?
Yeah.
Just a list. Okay, you've got 2 sections though. Nominal and financial, statement of financial position,
Yeah.
Okay, so I'll help you with the template, but I want you to try draw it up and see what you get. Okay. Okay, so heading for this? Yes, trial balance. We don't have to write the name of the business. We could have. This was Laksumana. Okay. It's fine. We can just keep it as trial balance for the year ended. Right, so trial balance for the year ended. Let me just go. Okay, you tell me what you want to do in terms of template. I'll tell you if you're on the right track. What does a trial balance look like? Let's try to remember it. Yes, but in terms of columns, that's it. Very good. Okay, so just draw 2 columns, one for debit, one for credit. That's it. And then you'll have different sections. Right, label those columns. So you've got the headings. Details, hey, good. DR, CR, perfect. Alright, and now you're actually ready to draw up the trial balance. You should split it into 2 different sections. They didn't do it here, okay, but we've done this before, so that's why I'm mentioning it. Okay, so you have a nominal account section, which is at the top. Okay, and then you've got obviously the financial position section. Okay, so you've got both. No, balances. What are balances? No, balances are balances. So, well, you could have said financial position balances, nominal account balances. You could mention that.
So just financial accounts.
Financial position accounts. Yeah. But leave space. So skip about half the page, yeah, just in case. So you got enough space. Yeah, right there. That's fine. Financial position accounts. Okay, you can write financial position first and then nominal later. It doesn't really matter. Okay, as long as you've got both sections. Alright, so now the rest you're going to do. Let's see if you get the same answer as the one in the textbook. Okay, if you do, great. If you don't, then we can just check what went wrong. And that covers another chapter. Let's just see, was there anything else? Okay, we covered the errors, and then they just have a chapter summary and then some theory questions. Okay, but other than that, everything's covered. So we'll just check that activity just now.